Okay. Good morning, everyone. I want to use this medium to welcome us to our Saturday virtual hangouts, as this is the last Saturday of the year. Glory to God that He has helped us this far to experience the last Saturday of the year. Today, we'll be talking about investments. It's going to be an introductory section. January, we are going to start fully on investments. I have with me today Mrs. Itunu. Please pardon me. I'm not sure I get Godi.
Are you saying something, ma?
Yes, I want to pronounce your
She's
surname.
saying something. Okay.
So she works in the banking industry. She was once a frontline staff in the banking industry. Now she's in the mortgage section. Welcome with me once again, Mrs. Itunu. Mrs. Itunu, over to you.
Are you saying something? Because I can't hear it from my end.
You can't hear me?
I still cannot hear. Let me go in and come back in. I
All
cannot
right.
hear it. Can you hear me?
Yes, I can hear you.
Sorry, were you saying something? Because I didn't hear any of it.
Oh, I was introducing you actually.
Ah, okay, ma. All right. Should
So,
I? Should I?
yes, start.
Okay. Good morning, everyone. Happy Saturday. Today we're going to be talking about why every mom should think about investing. And yeah, let's start. So, why should every mom think about investing? It helps us build financial security for our family. It helps us to grow wealth through compound interest, and we can achieve long-term financial independence and goals for our kids. Financial security for the family helps us prepare for emergencies like medical expenses. We are moms. Sometimes, some of us, when we have our babies, we are on either maternity leave or for the father's paternity leave, and we need some sort of money to set aside for such things as that. Also, for our kids, in regards to education, milestones, and all of those other things, okay? Instead of having to take out a student loan, there are other ways for you to save up for your children's college education and all of those things. I'm going to go to the next one. How can we build wealth over time? We can start.
Sorry, we can't see your presentation. Sorry.
Oh, okay. Hold on. How about now?
Yes, thank you.
Already. So, how can we build wealth over time? We can start with stocks, investments like stocks. We can invest in our 401ks. There are some of us that work right now at our places of work, and we have the 401ks, the IRA, the mutual funds, and all of those other things that can help us. Also, for the kids, we do have there's I have it in the presentation, but there is a student account you can open for your kids here in America from Fidelity Bank or other banks that have financial portfolios that you can use. Also, we want to set a good examples when we are investing by teaching our children as well, explaining about portfolios and all of those things, so that that's the way we can move generational wealth to our children. If you are just working for yourself, you cannot move that for your children. Okay. All right. And then how do we achieve financial independence? It's important for we mothers to be financially independent when it comes to income. We need to prepare for unexpected life changes like career shift. I mentioned when mothers have their baby, things are always tight. I'm talking from experience from myself. Things are always tight. But during that, when you were pregnant, did you start, putting things in place to save up enough money for you to be financially independent and to assist your partner with the bills and all those things? These are things that can help us to achieve financial independence. And there are several ways to start investing. The first way is for us to educate ourselves, learn the basis of investing. Investing, we are talking about real estate. When we talk about real estate, let's talk about I don't know if you guys have heard of REITs in real estate investing. It's another type of real estate investing that you can fund. You and a group of people can fund a real estate project together, and everybody has a certain percentage depending on the contract of how much profits they're going to be receiving. Okay. Also, when we talk about real estate investment, for those in America, we have home equity loans. With those home equity loans, it's a broad home equity loans is not just a topic just brushed through because it's deeper than that. With home equity loans, you can take equity from your home to buy either a rental property, a fixer-upper. That is another way for mothers to, be financially independent. You can set clear goals. You don't just want to jump into it. You don't just want to, run into it without defining the reason why you are setting or starting investments for yourself. You don't want to do that. You can also buy stocks, bonds. From when we were little, my dad, even up till now, we are still enjoying the benefits of him having to buy stocks in our names, bonds in our names in Nigeria, even from the real estate as well. We are enjoying from that benefit. He is no more here, but we are enjoying from that. He bought so many stocks, even we don't know how much it is. We have to get someone that will help us find out how much the stocks are. Every day we are finding out more. So those are the ways we can invest in our future as mothers, in our kids as mothers, in our families as mothers. You can also consult a financial advisor, or if you go onto Google, you can look for robo advisors. You have Robinhood. You have so many apps that we can use right now when it comes to things like that. There are resources that can help us as well. If you're in America, there are books, Smart Woman, Finish Rich by David Bach, The Millionaire Mom Next Door, The Simple Path to Wealth. There are websites. We have the Motley Fool, NerdWallet. NerdWallet is a very, very good tool to use. For parents that are not here, that are in Nigeria, real estate investment is the current thing that helps people get it's more like a side hustle for most people, but more like a real business for most people. And it's lucrative. It doesn't have to be rental properties. It doesn't have to be houses. As of last week, I was watching a podcast by I've forgotten the name of the pastor, and he mentioned now in Nigeria warehouses. If you want to invest in warehouses, that's a huge amount of money to invest in warehouses, rent out warehouses. If you have lands, you can build a warehouse on it. And you can, that's a huge income. You're talking about 50 million per year. So that's a huge income. You can do that. You have treasury bills. You have the federal government bonds that you can get from central bank. So those are things you can use. Mutual funds, stock exchange markets. Like I mentioned, we had We had shares from First Bank, Coca-Cola, so many, so many. You want to make sure that when you're investing in all of these things, you've done your research. You are very sure, because when it comes to investment, there are risks that are involved in it as well. So you want to make sure you are well informed on all of these things. Agricultural investment, Farm Crowdy, you can do that. Thrive Agric, you can do that as well as parents. Naira is depreciating. You can look into having a dollar dominated account whereby you can, do transactions using dollars, have that money set aside for you so that it can give you a hedge over, the depreciation of Naira. And there are communities of women, Susu, they do that in America. Who knew? So you can use Susu as well. If you are good at taking courses, Coursera is the best place to be. Udemy is the best place to be. There are several resources that you can use. I listen to podcasts a lot of times, and these are podcasts that you can listen to while you're doing the laundry, taking care of the kids, or doing something else. You can listen to it. You're driving to work. You can listen to it and learn from it. Here in America, you can use investor.gov. They have several tools, mymoney.gov. You have Facebook, looking for investing groups like Women to Invest, Moms and Money. You have Reddit, local meetup groups, even at your library as well. There are resources, there are books that would say investment for dummies. You can get those books. You can, talk to people that that are already up there. You can talk to them to invest. It's very important that we do all of these things to set ourselves or to prepare ourselves for the future financially. Okay, and just to conclude this, because this is a broad topic that needs to be dealt with very well, but just to conclude this, investing empowers us moms to secure our family's financial future. Okay, it's better to start today than not to start at all. Every money that is invested is a step closer to your financial independence. You don't have to do the bonds. You don't have to do the shares. How about starting a business? How about, YouTube, Instagram, TikTok, videos out there? What do you do at home? A day in the life of yourself. Put it out there. I have a YouTube, Instagram, and a Facebook page whereby I post things as well. You can do that as well. There are so many things you can use. You have Canva, you have Copilot. There are so many, so many. Okay, and it's just important, like I said earlier, let us set clear, measurable goals. Start small. You don't have to start with a huge amount of money. Start small and be consistent. Okay, be very consistent. Start small. Ask for guidance, and that is the end. Do you have questions or concerns that I can help you with?
Thank you so much. God bless you. Thank you. We have 2 questions in the Q&A section. If you have questions, kindly put it in the Q&A section. And if you want to ask your question, you can as well unmute yourself. Raise your hand, unmute, or raise your hand and I will call you to unmute yourself in case we have more than one. Can you see the Q&A from your end?
No, I cannot see it. Can it be posted in the messages?
Oh, okay. Let me post it here.
Thank you. And while she's doing that, do anybody have any investment ideas that I may not have mentioned that they are doing right now that can help us all? Does anybody want to share?
That's the first question. I'm pasting the second one.
Okay.
All right.
Hello, ladies.
Hello, sir. How are you, sir?
Yes, I'm good. Investment wise, I think you can also in your place of work, you can invest in your 401k. You can you can increase your 401k, and that's an investment that most people don't know of, that you
That's
can
fine.
actually increase the amount of money you put into it. Sometimes
Yeah.
they tell you
Yep.
put the minimum, you
Yeah.
can increase it to like 15% or 30% maybe you work too much overtime at this period of time, you can increase to 30%, and
Yep.
that 30% to go into your own 401k. And the beauty of it is this: you can actually borrow from that 401k to do things when you need to do it, and then the payment will be going back into your account, with the interest going into your 401k when you're paying it back, and they spread it for over years. So that's just another means of you building into your own life. It helps you. These are investment that people don't look into, but it's good. As much as you do as much as equity, just like you said, even here in America, if you come across, maybe you build enough 401k or whatever, you can, if you buy farmland, they are very lucrative here too in America. So if you go into real estate, there's so much of things that people invest in real estate. Some people are good with stocks. Some are good with stocks, some are good with, I'm not a stuff kind of person, but I'm looking into that of 401k of recent, and I see that it's an avenue to save, to have extra income. So that's just something I can add to that. Thank you.
All right. For me, I'm not a fan of 401k because it has to do with the Wall Street market. What about if the market falls today? What happens to that 401k? It is gone. So aside from the 401k, there are other options that you can also put your money into that that is concrete. All right. Yes, ma'am.
So what are the other options aside 401k?
Other options are the rental income. You have the Airbnb side hustle. You have the rental income. You have what's it called? The REITs I mentioned about finding a group of people, putting money together, investing, maybe building like community homes together and earning profit from that. That's it's not tied to the stock exchange. That's something that you can do together. If something happens tomorrow, all of you can decide to sell that property, get back your money as well. So those are factors that you can also use. You want to put your money into something that you know for sure when you calculate your risks, it's not gonna affect you. Because if we are talking about the housing stuff that happened years ago in America, people died because of that. People
Mm,
committed suicide because their 401k was gone. Every investment that they thought about, it was gone. So you want to make sure you're not just putting that money in the 401k. You can put the money, like you said, buying land in America. Do you know that you can lease land as well? You can lease it for other people in America to use your land. If you are not using it currently, you can. Amazon does not have a warehouse to their name.
yes.
You can lease it to them and they can use it for whatever they want to use it for. You that those are places that I would say it's better for you to put your money into than the 401k. You can still do the 401k. You can still do it, but don't put all your eggs in one basket. So yeah.
Okay. Thank you. The questions in the chat, the first one says, I had children with student accounts can't have access to grants when they are enrolled in college until they exhaust their savings. How true is this?
I would say you should speak with your financial investor about that. I know there are some student accounts that you open for your kids, especially college savings. They can still get grants. They can. It depends on the type of account you opened. And it's very important with that question. When you enroll them, they give you something called a disclosure. You want to read the disclosure before you accept the terms and conditions, because in the disclosures, those tiny words, they would put that word in there. They call it clause. They will put it in there to tell you what, but most of us, we don't read it because we are just thinking of, we want the best for our kids, and then we just go ahead and sign it. The same thing goes with your mortgage loan. There are some mortgage loans, if you have the money right now to pay it off, you won't be able to pay it off because of those fine lines. So it's the same thing. I wouldn't say it's all of the student accounts. No, it's not. There are some that they can get grants for. So you want to read those fine lines and make sure you pay attention to it.
Oh, okay. Are there different account types, like different students' accounts?
There are different student accounts that you can open. I know of Fidelity Bank has some. I know of another one my uncle introduced to me. So there are different types. I can look into it and reach out back to you on the different types, but there are different types you can open. Yeah.
Oh, okay. Then the second question is, can you please suggest type of stocks to invest in?
Okay, disclaimer here. I am not a financial advisor, but I do have stocks for my kids with Amazon, Walmart, what's the name of this other one? Tesla. Okay, those are stocks that I have. Their dad has more than that. I believe he even has Bitcoin and cryptos for them as well. So those are the ones I invest in. We also have, in my husband's country, he's from Benin Republic, he has some in there as well. I am planning to have some for them as well in Nigeria. So it depends on the location you are in or you are at. You can look into those things. Best place to go to will be your bank, your local bank. Speak with a financial investor. Those podcasts that I recommended, you can listen to them. They can tell you what stocks are doing well right now. I do know of recent, there has been a lot of noise about Legos going up. There's been a lot of noise about those what's it called, shares going up with Legos. So you want to look into those things. It's not a straight way. It is up and down. So you have to be ready for the up and down and move with the waves as well. So yeah, but those are the ones I use that I can recommend. Those are the ones I use.
Okay, so can you suggest platforms that can help with this Bitcoin crypto thing? Because so many people that I know that are into crypto, they are running at loss.
That's why I said investment is a risk. It is a risk, especially when it comes to buying shares and all those dividend things. It is a risk. I know that we bought ours from Acorns. There's an app called Acorns. You have Robinhood. You have Cash App. Cash App does have the option for you to purchase shares from them. So those are the ones you can, yeah.
That's good. I use Cash App. I never thought of investing. I use Cash App to collect money from my customers. I didn't know that they have investments.
They do, yes.
Wow.
They do, yeah.
Okay, I will check Cash App out. Okay, any question? Please, let's talk. Do we have any question?
Not just question, also share ideas. We are here to learn from each. Yes.
Okay. So while we wait for those that have suggestions or questions, I have a question concerning equity. I want to understand how equity works. How can I buy more houses while I'm still paying my mortgage? And how am I going to finance the new mortgage, the new house that I just purchased? Because I know so many people I've met people having so many houses, and they will tell me they're still paying their mortgage from the initial one. So how does this work that I won't get screwed?
Good question. Good question. When it comes to home equity loans, let me start from the beginning so we can understand the concept of home equity loans. There are two types of home equity loans. You have the fixed home equity loan, and then you have the home equity line of credit. Okay. With a fixed home equity loan, that means that the rate is fixed. With a home equity line of credit, the rate is not fixed, it is variable. There are advantages and disadvantages to the both of them. The first one is a personal loan, more like a personal loan. You take the money at once at closing. The other one, you take the money, you don't use it, you use it, it's there for you for 20 years. You don't make any payment on it until you take out money from it. With a fixed home equity loan, whether you use it or not, you still make a payment towards it, and it's good for 20 years. After 20 years, you have to reapply again for another home equity loan. Now, to answer the question, when you want to use the investment in your property, it's very important your credit score is high. Okay, because with the company I work with right now, we just revamped underwriting rules and regulation, the guidelines for underwriting, and it's much higher and it's tighter. It's getting harder to get those home equity loans, okay, because of the inflation, the economy, and all of those things is getting much tighter. So you want to start with that. Your credit score has to be very good. Number two, your debt to income ratio, which is a complex thing, but simply means the debt you have currently, can your income carry that debt plus a new debt you're going to add on it? Okay. So you have to look into those factors as well. Okay. When it comes to your credit scores also, you want to make sure you're not late on any payment, because no company is going to borrow you that money. If they borrow you that money, they may give you on a higher interest rate. Okay. They are making the profit. You are paying them back. There is a collateral to take back from you. Your home. If you like, pay it. Don't pay it. They got your home. So that's on you. So you want to make sure that everything is set in place for you to do that. Now, if you can afford it, when you apply for the loan and you get the loan and you can afford it, all the debt to income ratio is looked at. There is nothing wrong with the title of the property. There is nothing wrong with your income. You are all set. Then you can get the loan. When you get the loan, I would advise you get that loan and put it aside and start shopping for homes. Do not, in the process, begin this shopping for homes. Don't do it. Get the loan first, make sure it is set aside, start shopping for homes. When you get your home, if it's a fixer-upper, you want to fix it before you rent it out. Now, during the course of renting, you want to have some sort of income at the side, maybe like 10,000, in case anything happens. Okay. I was speaking to a client yesterday, and she was telling me the reason why she was getting a home equity loan was because the tenants she had in her property destroyed the whole house, destroyed the windows, the deck, everything. She did not know. She doesn't live there. She's been renting for 30 years. She had no idea. But these people destroyed it. She also talked about a couple that lived in the house for 12 months but only paid for 1 month. You are renting because, like, we are doing this because we want to have additional income. We want to be financially independent. There is a reason why we are doing this. So if you're not prepared for all of these things, it can come back and bite you later on. Whereas there are some people that it's going good for them. It is good for them. When they get the home equity loan, they have some money set aside. With the rent that the renters are paying them, they use it to pay back the mortgage. Okay, so that's how they do it. It's working fine for them. All those things are going well for them. Before you know what's happening, they come back for another loan, they buy another property, come back for another loan, they buy another property. But when it comes to home equity loans, I'm going to ask you to start small. Start small. don't go for a house. Start with a condominium, a 1-bedroom, or a studio. Start with that. Are you a hands-on person? Think about that as well. When they have to fix the light bulb, are you going to call an electrician to do that? That's your profit going there. Are you hands-on? You can go there and fix it. Are you a very good landlord? Because the other thing is, if you're not a good landlord, nobody would want to relate with you. There will be no recommendations for your property as well. So there are several factors to the home equity loans. There are several ways that you can look at it, but to pay the home equity loan, it's always typically when the people that you rent the place to are paying their rent, you take the money for rent and you put it to the home equity loan. Within the next 20 years, you should be able to pay it off, or within the next 10 years, depending on how much you are charging them. I won't advise you charge them for the amount you pay for the mortgage on that investment property. Charge a bit more so that you have a bit more to save. I hope that answers the question.
Yes. Yes. Thank you. Yeah. Any other contribution or question? Please, let's talk.
So I have a question concerning the mortgage. So, assuming someone owns a property and they can't pay, we all know that people get their loan from the bank. So at the end of everything, when they can't pay, the bank will take the property from them. So my question is that, does a bank serve as a landlord? Can someone get a mortgage, kind of mortgage directly from the bank and be paying directly to the bank as the landlord?
That question is a bit confusing. So number one is, when it comes to mortgages, the only place you can get that loan is going to be from the bank. Okay, there are private investors that can give a mortgage loan. Okay, but very important with mortgage loan, there is always a collateral. And what is the collateral? Your home. So if you go for a mortgage that you cannot afford and you cannot pay it back, it's already written in the fine lines. They will take that home back from you. So when it comes to mortgages, also because of the complexity of having a mortgage loan, there are several documents to it. I would always advise you go with a bank. Go with a bank because they would find out the ins and outs of the transaction. Is it a valid transaction? Is the real estate agent okay? Is the title okay? The escrows and all of those things, they would look into that. Are there liens on the property? They will look into that. So I will always advise you go with a bank. But for some people that may not have a good credit score, they go with private investors that can invest or give them the money to buy the property. So I would always say go with the bank, but I do know of people that would have a certain amount of money. They don't want to have a mortgage on the property, and they will go buy that home in cash. But most of their homes are going to be fixer-uppers, whereby you have to fix it. But if you want a ready-made home that is move-in ready, I would advise you go with a bank. Now, in regards to not being able to pay your mortgage, before the bank, depends on the type of bank, but for community credit unions, before they take that property away from you, they will try their best to work with you on a payment plan, okay? With your income on a payment plan. They don't just outrightly take it like that, because there are laws that are binding you and them as well. And there are laws that can favor you, and there are laws that can favor them as well. So that's that. They would work with you on it, okay? I hope that answers the question, ma'am.
Somehow, can bank be a direct landlord?
Banks are not landlords, because banks don't own homes. The only time they own homes is when they give you the money to buy the home. If that's the question you're asking. Well, that
So
doesn't make them landlord.
the only time their landlord is when they give you money directly to bank. So are you going to be paying directly to them?
Yes.
So that is so indirectly banks can be a landlord that you can pay directly to.
Hmm.
I know my question is like a logical question somehow.
So the duties of a landlord is different from the duties of the bank.
Yes, I know.
Okay. Okay. So if that is the way you are thinking about it, I would say yes. Like you said, banks can be the landlord because you're going to be paying them back. They now own your home because they gave you the money for that home.
Okay, so there is a program like that. That bank can be your direct landlord that you can be paying to them monthly mortgage to them directly instead of dealing with external landlord.
Oh yes, yes. That's the whole topic of the mortgage. That is the whole reason for the mortgage. You go to the bank, you tell them you found a house. They work with you, they look at your income, they look at other documents, and then work with you to give you that mortgage loan. So that's what we call it here, mortgage.
Okay, so where I'm going is that if you don't want to do anything like loan, you just want to relate like landlords to tenants. You don't want to go through that
Oh
long thing. That's where
no,
I'm going. Okay,
no, banks would not do that. No, they won't. No.
okay, thank you.
Yeah. You can look into private lending. You can look into private lending, and there is a program called is it rent to own? Yes, there's a program called rent to own. That is one program that you can have a what's it called, a contract between the landlord and you, the rental. The both of you can have a program whereby you can be paying a certain amount of money to own the home in the future.
Okay, and that does not involve banks, right?
It doesn't involve banks, it's just between you and the landlord. It's called rent to home. Google it, rent to home.
All right, thank you.
Thank God, man.
So, any other question before or contribution? Okay. I have a question. When you mentioned work directly with the bank, does that mean we have to walk into the bank and tell them I want to purchase a house? Or because I am used more with going through a lender, talking to a lender, and they do your pre-appraisal, whatever.
So there are several ways you can do it. If you want to use a bank, that's when you go into the bank. Do you even have to go into the bank in this technology age? No. You can also start the application online yourself to apply for a mortgage. You can do that. They would be the one to do the appraisals, the liens, and all of those other things. You can all, like I stated, there are private lenders. There are also like private mortgage lenders that are insured by FDIC that you can use as well, and they can help you. So you have to look into that. Would I use a private mortgage lender? I would not, because they tend to sell the mortgage, and you will be confused on how to track your mortgage loans. So I wouldn't encourage private lenders. I would encourage you using a bank, because a bank has rules and regulations they have to follow through. There are compliance that guides those mortgage loans that they have to strictly follow through. Private lenders are in there for the profit. They want to make sure that whatever way it may be, whether it doesn't, it most times will not benefit the lender. It most times will not benefit, yes, the lendee. It benefits the lender. It benefits me. So I'm going to give you whatever you want as far as you're going to pay me back my money. So I would say yes, use a bank and go from there. Yeah.
Okay, so talk of interest rates. Which one is better, working with bank directly or with a private lender?
When it comes to working with banks, with the interest rate, you would have several options, like paying for points. Like pretty much paying for points means buying down your rate. Okay, you would have the option to buy down your rate. If you work with private lenders, they may not have that option. Okay, they may not have that option. They may have the option of, how will I say, advertising tactics of telling you, oh, when you come to, get this mortgage loan with us, we're going to give you some amount of down payment, okay, towards your down payment. And that itself can be detrimental to you at the long end, because we are talking about the rate. They may hide it under the APR as well. So you want to make sure that you are able to understand all of those things, okay?
Mrs. Okay, okay, thank you. Yeah, Anthony.
So you want to make sure that you are able to understand those factors, because banks, like I said, will give you rates that you can choose from. The bank I work for, we have like almost 7 rates that you can choose from. We have the PAR rate. The PAR rate is the rate whereby you don't pay anything for. It's at 100%. And then you have the one that comes with lender credits that offsets some of your closing costs. But because it's a bank that has compliance, it's not added or hidden somewhere in your escrow or hidden somewhere in your monthly payment. Okay, so it's out there. But with private lenders, they may give you a rate. And because most of us are first-time home buyers and we don't know the difference, you think they are working for you. They are not. Most of them are not. Some of them may, but most of them are not. So you want to weigh your options of which one works for you at the end of the day, what makes sense for you.
Okay, thank you so much. So with this mortgage, is it the same thing with auto loan? Does it work the same way with auto loan?
No, auto loan works differently. Mortgage loan takes at least 30 to 45 days to complete.
Okay.
Auto loan, you go into the bank, you go get your card the same day. It's a different process.
Okay.
Yeah.
I need to go to the dealer shop first, or I go to the bank first?
You go to the dealer shop, you pick whatever car you want to buy. You get what is called the purchase and sales agreement. You take it to your bank. And when you get to your bank, they look at them, verify the dealership to make sure it's a good dealership. They would give you the check after, pulling your credit score, looking at your income and all of those things. They would give you the check, and then you go back to the dealer and you pick up your car, but you pay the bank back.
Okay. Oh, okay. All right. Thank you so much, Mrs. Itunu. We really take much of your time today. Thank you so much for this section. I've learned a lot of things. Hope to have you soon again. Thank you, mothers. In case we have any question, Mrs. Itunu is in the group chat. We can as well private chat her. If we have any question, please kindly get in touch with her. Thank you, and God bless us all. Compliments of the season. See every one of us next year by God's grace. Volunteers, volunteers, please wait for